All right. Good afternoon, everyone. Thanks for joining. We have David Korman with us today. We are going to be discussing the foreign buyers tax and what is happening with it. We had the tax come up, then there was a ban. This has been carrying on for roughly, I think, about 2 years or more now, David, right? So just to get an update on that, a lot of us do have foreign investors as clients, and it's kind of dampened our business a little bit, but it's good to keep an eyeball on what's going on. So over to you.
Okay, thanks, Sabiha, and good afternoon, everybody. Thanks for joining us today. So, first thing I want to tell you to remember, keep this in mind for the next little while. You do not shoot the messenger. Okay, so today I'm the bearer of some news that doesn't help any of us in our businesses because we're in the business of doing transactions and we need more transactions and more buyers and et cetera for you guys to make a living, for me to make a living. So I'm not happy about this tax from a personal point of view because this I think dampens the market a little bit, and we don't need that. We need stuff to encourage the market. But you'll forgive me. My point number two will be I'm asking for forgiveness in advance because I am going to give you a little bit of political commentary in my introduction to this because I can't help myself sometimes. And usually when I'm doing a podcast with David, at least he sometimes will put the reins on me a little bit. Wait, be careful what you say. We're recording. But I'm not a big fan of any of these taxes. So what we're going to talk about today is a brand new tax that came into play on January 1st of this year. And this is a municipal non-resident speculation tax. It only applies in the city of Toronto. So before I get into that and explain what this is, let me just give you a little recap of the other taxes that are affecting the market that relate to foreign buyers. So the first one that came out was the provincial non-resident speculation tax. And if you recall, when this came out, we actually didn't have the current conservative government. It wasn't them that did it. It wasn't Ford's conservative government. It was the Liberal government that had been running the province for about 10 years. And they came up with this idea for the non-resident speculation tax. And this was when the market was going crazy, all these multi offers, prices were being driven up. They said, well, we got to do something to stop this. And there's all these foreign buyers in the market and they're all buying in the GTA. So we got to do something and stop that. So we're going to impose this tax on them, which is a provincial tax, the non-resident speculation tax. And if you recall, when it first came out, it wasn't for the whole province of Ontario. It was just in a limited area, which they defined as the Greater Golden Horseshoe, which was basically the GTA and some surrounding areas. But if you bought outside of that area, like if you bought in Orillia, I think at the time, you weren't subject to the tax. If you bought in Windsor, you weren't subject to the tax. So it was just sort of around GTA and extended into Niagara and around Lake Ontario at the time. So that wasn't a ban. It was like foreigners were allowed to buy, and it applied to residential property, and there's certain definitions of what it applied to. They could buy, but they got to pay a tax. Okay. Then that was followed up by a federal ban on foreigners are not allowed to buy residential property anywhere in Canada. Federal law. Trudeau's Liberal government passed this. So my political comment in that is I never understood why they passed this on a federal level for a couple reasons. First of all, housing is something that's under the jurisdiction of the provinces and not the federal government. Okay. And if there is a very hot market going on in Ontario, and at the time, Ontario wasn't even saying it's all of Ontario, it was just the Greater Golden Horseshoe. And in BC, there was a problem. The same thing was going on in BC, very hot market, prices being driven up and everything. But the federal government decided we're going to ban foreigners from buying in Canada. Ban. Can't buy at all if they fit a definition as a foreigner. And I never didn't understand it because what if a foreigner wants to buy in Regina, Saskatchewan, where they had a depressed real estate market and they could use the boost to their economy? Why would they bother banning that just because they're really looking to try and solve a problem in Ontario and a problem that they perceive in BC, and it's not their business anyways. The provincial governments are doing their MNRST and it's their jurisdiction. So that was for my play. I never understood why they did it. So anyways, they did it 2 years and then they've extended it. So that still exists. So if you fit the definition of a foreign buyer under the federal law, you can't buy a residential property. If it fits the definition of a resident property, you can't buy it all while this ban is on. Now, some people don't fit that definition of a foreign buyer, so they might be allowed to buy in Ontario, and they still might be subject to the provincial MNRST, which means you can buy, but you got to pay a tax if you choose to buy to the province. Okay, so there was that legislation. Now, the city of Toronto, in its wisdom, decided, oh, NRST, that's pretty good for the province. Maybe we can get in on that. Let's impose a tax as well, like the provincial NRST, and it'll apply to any properties in the city of Toronto. And we're going to charge a tax on foreign buyers as well. So that's the topic of today. And this is the new legislation. Okay. So if you're banned from buying, it doesn't matter. You can't buy a property in Toronto either. But if you don't fit the definition of a foreign buyer under the federal law and you're allowed to buy in Ontario or in the city of Toronto, you can buy it, but you might be subject to paying this NRST tax. Okay. So that's the analysis that we have to go through. So with that, I'm going to get into our actual slide presentation and just skip through our preliminary stuff. And you all know about our podcast. We just did episode 163. We recorded on Wednesday, so that should be 161, 162, 163 to be coming out in the near future. Anyways, here's how the city of Toronto came up with this tax. And by the way, like I start off by saying, don't shoot the messenger. So if you have an issue with this, you don't like this, you think this is dumb, you don't like it, it's affecting your clients, affecting your business, Sabiha will give everybody the direct mobile number to contact Olivia Chow. I think you've got her number and her residential address and best way to contact her. Sabiha, I'll leave that up to you. So, okay. But it's not Sabiha's fault. It's not my fault. We're just bringing this news to you. So, so the city of Toronto has been struggling for years trying to figure out their finances. They need more revenue. They've historically been reluctant to increase taxes in the city of Toronto to levels that they should have been, like 30 years ago, 20 years ago, 10 years ago, that the taxes were too low to fund everything. So they're trying to find ways to increase revenue. So Olivia Chow has done some pretty significant property tax increases for the last 2 years. And they've also, even before Olivia Chow, they decided to add a municipal land transfer tax, which created a whole bunch of revenue as well. But they're still looking for other ways. So they did a report to figure out if there's another way to tax real estate transactions. And instead of taxing everybody, let's tax foreign buyers on residential property in the city of Toronto. So they did this report. They had a study done, and they recommended this new municipal non-resident speculation tax, which will be applicable on foreign buyers, which is a defined term, how they figure out who it's applicable to, and it's certain residential property. So it's not applicable to all residential property, but certain residential property where this tax will apply. Okay. Now, just like the provincial NRST and this city NRST, they talk about it as a way, well, let's discourage foreign buyers from buying because we have a housing shortage. We want the properties to be available to the citizens of Canada and the citizens of Ontario, the citizens of the city of Toronto. So we really want to sort of stop the foreigners from buying, so they're not driving up prices and they're out of the market, and it leaves it for a better market for the Canadians to buy properties here. So, and that was sort of some of the thinking that went into the provincial legislation when they first imposed the NRST. Like the market was going crazy here, and price. So that's what they were telling us. But then in practice, they hadn't really studied how many foreigners are really in the market. And it wasn't until after they passed the provincial legislation they started figuring that out. It turned out to be a very small percentage. I don't remember exactly what it was, but it was 3% or 6% or 7% of the market was actually
5%.
Was it 5%? Okay, it was
Mm-hmm.
somewhere relatively low. So if you get rid of that 5% from being in the market, you still got 95% that are driving up the price because everybody wants to live in the GTA. So it wasn't really doing its intended purpose, stated purpose for that. But on the other hand, the provincial government was enjoying the revenue that it was being produced because most of the foreign buyers, when this first came out, decided to still buy and pay the tax. And the province liked the revenue that was coming in from it. So it didn't have the stated goal being achieved, but it had a secondary goal of additional revenue for the province. So that was the Liberal government. When the Conservatives came in and took over, even though they were critics of it when it first came out, because it was a Liberal plan, they didn't get rid of it when they came into power because, hey, look, we're generating all this revenue. So as a matter of fact, they changed it to a higher tax rate, again on the theory that, well, we got to raise the tax rate to stop people from buying. But the reality is they didn't raise it enough. People still were choosing to buy it, and they're just paying the higher tax rate on it. It's good revenue for the province. So it's there. It exists. Okay. So back to the city of Toronto. In February of 2024, like, a little over a year ago, they passed this non-resident speculation tax on foreign buyers' residential property in the city of Toronto. And it came into effect January 1st of 2025. And it's amazing how so many people didn't know about it. Some people still don't know this exists, even though it came in, because it was sort of flying under the radar to some extent. So that's what happened. So like I said, it came in January 1st. So it applies now. A foreigner that buys a property that closes anytime after January 1, 2025 has to pay this municipal NRST. And it's a 10% of the purchase price tax. 10%. You buy $1 million property in the city of Toronto, residential property that fits under this, and you're a foreigner, you're allowed to buy it, but you're going to pay 10%. You're going to pay $100,000 tax on it. Okay. And I'm just going to repeat what I said earlier. Many foreigners are not allowed to buy at all. They're banned under the federal law. But if you're not one of the foreigners that's banned under that law, so you're allowed to buy, you may be a foreigner under a different definition, provincially and municipally, that allows you to buy, but you have to pay a tax. So if you have to pay this city of Toronto tax, it's 10% of the purchase price. So it's not insignificant. And this has nothing to do with land transfer tax. Everybody in the province, everybody that buys any real estate in the province pays provincial land transfer tax. Whether it's residential, commercial, industrial, doesn't matter what type of real estate it is, everybody pays provincial land transfer tax. If someone buys real estate in the city of Toronto, they pay municipal land transfer tax on the purchase. Now, the land transfer tax rates, both provincially and municipally, aren't anywhere near 10%. It's more like 1% of the purchase price. It's a formula based on the price and everything. So it's a much lower amount, but that's still there. You still pay provincial land transfer tax. If it's City of Toronto, you're going to pay the Toronto municipal land transfer tax. And now if you're a foreigner, you're going to pay provincial NRST and you're going to pay municipal NRST. Okay. Now, the way they pass,
David, what happens if somebody's purchased pre-construction prior to January 1st and it closes after January
well,
1st?
we're going to get into that.
Oh,
The short answer is they're going to pay the tax. Okay. And I'll go through that with you in a few minutes. Okay. But they're going to pay the tax. So the way they drafted the City of Toronto NRST is they're mirroring everything that was in the provincial NRST in terms of the definitions, the exemptions, the rebates, how it applies in definition. So you'll see it. So they're not creating a new set of definitions, which is good because it's the same as the provincial, but the provincial definitions were for all this stuff is different than the foreign buyer ban. Okay, which is why you got to cross that first hurdle. Is your client potential buyer banned altogether? Then none of this applies. But if they're not banned and they're allowed to buy, are they going to be subject, because of the definitions as a foreigner, to pay the provincial municipal, the provincial NRST, and if it's in the properties in the City of Toronto, they may also have to pay the City of Toronto municipal NRST. Okay, but the criteria and definitions are the same as the provincial law. So the first thing is determining whether or not someone's considered a foreign entity. And if you're a foreign entity under the MNRST, which is the same definition as under the provincial NRST, then you have to pay this tax. So a foreign entity is someone that is either a foreign national or a foreign corporation or a taxable trustee that buys residential property on behalf of someone else. So the first thing to keep in mind is, and I know some of you are already trying to scheme and figure out how do we get around this thing. Don't bother, okay? Because everybody tried to do that with the provincial NRST, but they were anticipating that when they drafted that legislation to cover all the potential loopholes that everybody was going to be looking for. Because people say, oh, I'm a foreigner, I can't buy, I got to pay the tax. So you know what? I'm going to get my friend who's a Canadian citizen to buy it for me and just hold it in trust for me. Well, that doesn't work. Okay. They'll figure that out easy enough. That's why it's a trustee situation. You're not going to get around it that way. And they say, well, you know what? I'll incorporate a company instead of me buying. I'll just incorporate a company. No, that's considered a foreign corporation. Okay. So that loophole they closed right away. So don't bother trying to come up with these various schemes. They're not going to work. They've already figured them out in advance. So a foreign national is anybody defined in the Federal Immigration and Refugee Protection Act as an individual that's not a Canadian citizen or a permanent resident of Canada. So if you are a Canadian citizen or permanent resident of Canada, you can buy a property in the City of Toronto. You're not paying this tax. You're just going to pay your regular provincial land transfer tax. You're going to pay your City of Toronto land transfer tax. You're not going to pay any NRST to the province or the city. No problem if you're a Canadian citizen or a PR. If you're a foreign corporation, you're going to pay this tax. So a foreign corporation is a corporation. It might be incorporated outside of Canada, or it could be a corporation that's incorporated federally in Canada or incorporated provincially in the province of Ontario. But if it's controlled by a foreign entity, either a foreign national or a foreign corporation, then it's going to be considered to be a foreign corporation and still subject to this tax. Okay, so again, they're anticipating closing the loopholes before you can even think of them. And then taxable trustee is in there as well, because just having an entity hold it in trust for somebody that's a foreign entity, a foreign national, or foreign corporation is not going to work. Okay, and they're going to figure that out, and they're entitled to certain documentation. And even if you get away with it at the time of closing, they have very unlimited audit rights, and they'll figure it out, and it would have to be repaid with taxes and penalties and things like that. So this tax is not a tax on all real estate. Okay, the tax applies on transactions of at least one and not more than 6 single family residences. So if you're buying 7 single family residence, it wouldn't be applicable. So the easy examples of what it would be applicable to. Oh, and by the way, so it's not applicable to commercial property, industrial property, things like that. But in terms of just residential, it applies to anything that's got one and not more than 6 single family residences. So a detached house, semi-detached townhouse, a condominium unit are all considered single family residences. So the tax would be payable. Now, there's some situations where someone might be buying multiple condominium units. Well, I'm going to buy 7 condominium units. So therefore it's more than 6. Therefore I don't have to pay this tax. Well, that doesn't work. Okay. Each condo unit is considered one separate single family resident. Doesn't matter if you buy them at the same time, and it'll still be subject to the tax. But if you're buying a building that has more than 6 units in it, and you're buying the overall building, then it doesn't apply. If you're buying an apartment building that has 100 units in it, even though it's all residential use and being rented out, it doesn't apply, because those are considered commercial transactions for the purposes of this act, for the purposes of a lot of things. You couldn't, if you went to a lender saying, I'm buying a residential apartment building with 100 units in it, they treat that as a commercial transaction anyways. Not the fact that the use is ultimately for residential purposes has nothing to do with their lending criteria. They'll want you'll go through a commercial lending process and not a residential lending process, and they'll want security based on that, and the rates will be based on that. Their underwriting criteria will be based on that. They'll want assignments of rents and leases and things like that. And they're looking at cash flow and things, which is different than a residential transaction. So commercial transactions are exempt from the tax. Industrial, it doesn't apply. Agricultural land doesn't apply. Okay, so it's residential properties 6 or under. Okay, is what it's applying. So that's the type of property. Now, in terms of determining the amount of tax, it's based on the value of consideration. So usually the value of the consideration paid on a transaction is the purchase price in your standard agreement of purchase and sale. Sometimes there might be different ways of satisfying that purchase price. There might be an assumption of a mortgage or a vendor take-back mortgage involved in a transaction. That doesn't matter because those amounts are still part of the consideration paid to acquire that property. So that'll be included as value of consideration, and you're paying the 10% tax based on the total value on a transaction. There are certain types of transactions where, like, there isn't a stated purchase price, so a determination has to be made for the value of the consideration based on the fair market value at the time. So there had to be some evidence as to what the fair market value was. And this would be applicable if someone was entering into a long-term lease of a property. Instead of buying a property, they're entering a long-term lease of more than 50 years on a property. So the tax will be applicable on that. And they'd have to do an evaluation at the fair market value of what that property is worth, and you pay a tax based on that. Same thing if the transaction was the transfer of a property from a corporation to one of its shareholders, or if it's a transfer of property to a corporation and in exchange there's an issuance of shares of the corporation. Those types of transactions are still subject to this tax, and a determination of the fair market value of the property would have to be determined for those type of transactions, and then the 10% tax would be payable on those as well. Now, just like the provincial NRST, there are exemptions available for this if people fit the proper fact situations for exemptions. So if an exemption means that you don't have to pay the tax, okay? So in practical terms, when we get to a closing, a form has to be completed and submitted to the government at the same time, just like land transfer tax, and we can't close the transaction until the ministry receives that form completed, and it'll say either that the NRST is applicable and it's being submitted and here's the amount. And you have to do that in order to be able to get to register and complete the transaction. Or it'll say I'm exempt from paying the NRST, and you're completing information as to why you're exempt. Okay, so the exemptions that are available, just like in the Provincial Act, are if someone is a nominee, a protected person, or a spouse of someone that otherwise doesn't have to pay the NRST, or a spouse of a Canadian citizen, a PR of Canada, a nominee, or a protected person. So, the details of that are, I'll give you a little bit more later on with this presentation. Anyways, but I've included the website information because the province of Ontario has pretty good information on the NRST site, including exemptions for that. So that's why we wanted to include that on here. So I can invite you to look it up. So that's an exemption. So if you're exempt, you don't pay the tax. Okay. Now the provincial NRST, and again, the City of Toronto NRST also has a rebate that's available if you fit the criteria for a rebate. So a rebate's different than an exemption. A rebate means at the time of closing, you weren't exempt and you had to pay the tax, and you paid the tax. But after closing, if you become if you're a foreign national, you close your transaction, you paid your tax, but within 4 years of the date of closing, you became a permanent resident of Canada, you can apply to get that tax back in full. Okay, if you fit the right criteria and you go through this application process. So that's the same as the provincial NRST. You could pay the provincial NRST, and if within 4 years after closing, you become a permanent resident, then you apply to get it back. If you become a permanent resident 4 years and 1 day later, you're not going to get it. Too late. But if it's within those 4 years, you can apply and get it back. And again, we've added a link here to the City of Toronto website that sort of outlines the criteria for rebates, so you can get more details on that there as well. What's really interesting, I found, because none of this is, this might be really boring, but some things are a little more interesting than other things. What was sort of eye-opening, maybe put it that way, for this municipal NRST is that there's no grandfathering provision. And it's really unusual for a government on any level to do something like this. And this goes to Sabiha's question earlier. Okay, so if you bought a pre-construction property in 2020 that was supposed to be completed in December 2024, and it gets extended and now closes on January 1st, 2025, or any day after that, that buyer has to pay, and the property's in the City of Toronto, that buyer has to pay this municipal NRST. There was no grandfathering put in there. When the provincial legislation came out with NRST, there were grandfathering provisions. Okay, most of the time government doesn't do something like this because there's an inherent unfairness to this. Because when that foreign buyer bought it in 2020, this law didn't exist. And now it's 5 years later, they're coming to their closing, and they're going to have to pay a 10% tax on this. Or if they can't afford to, then they default and they're in breach of their agreement purchase sale with the builder, and they lose their deposit monies. So there's an inherent unfairness to this. But this is the way they passed this law. No grandfathering provision. So it doesn't matter when the agreement of purchase and sale was signed. It only matters when the closing takes place. And if the closing takes place anytime after January 1st of this year or after, the MNRST is going to be payable. Okay? So in my opinion, it's very unfair. And again, I direct you to Sabiha to get Olivia Chow's home phone number and lodge your complaints. Okay, because there's a lot of this I don't like, but that in particular I find offensive. Like that's, and I don't know what the rational reasoning is. Well, we don't care about foreigners. We're not imposing this on people of Toronto and citizens of Canada. It's just foreigners, so screw them and let them. They want to close their transaction. They got to pay us 10%. They don't want to close. That's their business. We don't care about foreigners. I don't. I our country's built on foreigners, so I take offense to that personally. So, anyways, that's what it is. So that's a pretty onerous provision, I think, to be put in any law like this, to not have some sort of grandfathering provisions. So just to give you an idea, I always find it helpful to put some numbers to things. You just get an idea of what a foreigner might be facing to buy a property. And again, they had to clear that first hurdle. First hurdle is, are they banned from buying altogether? So they clear that. They're not banned. They're allowed to buy, but they may be subject, but they might be subject to this foreign buyer tax. Okay. So scenario one, purchase price $500,000. You got a $500,000 condo they're buying. The purchase price of $500,000, City of Toronto. Okay, if there's still such a thing, they're going to pay provincial land transfer tax, $6,475. They're going to pay provincial MNRST, $125,000. Now they're going to pay municipal land transfer. That's been in existence for quite a few years already. So they got to pay the municipal land transfer tax, another $6,475, because it mirrors the provincial land transfer tax. And now here's the new tax, the municipal MNRST, 10% of the purchase price. So that's another $50,000 that a buyer is going to pay. So they're going to pay $131,000 and change to the province. They're going to pay $56,000 and change to the City of Toronto. They got to pay $187,950 in addition to their purchase price in order to close the transaction. 37.6%. So we're not talking small change here. Okay. Scenario two, you just see how it escalates. $750,000 purchase. They're going to pay almost $200,000 to the province, and now they're going to pay another $86,000 to the city. $285,000 they got to come up with to buy a $750,000 semi in Toronto. Okay. $1 million property in Toronto, they're now paying $382,000 in taxes on that, 38.2%. And if someone is going to buy a nice home in the heart of the City of Toronto for $3.5 million, they're going to pay almost $1 million in taxes to the province, and then another $428,000 to the City of Toronto. $1,377,950 in taxes over and above their $3.5 million purchase price, almost 40% in taxes. So will it deter foreigners from buying? So far, every time there's been a new level of taxes, it hasn't deterred. People have still chosen to do it, and they're paying the tax. So we'll see. So if it deters from people from buying, then it leaves the market. It takes those foreigners out of the market. But like Sabiha said, it's 5% of the market. There's still 95%. So, but I think a lot of those 5% are still going to be buying, and they're going to pay it. And I think the city and the province are counting on it because they want the revenue from it and are expecting the revenue from it, because it's still a good place for foreigners to invest. Okay, so we'll see. We'll see what happens. So I did promise that I would do a bit of a recap or refresh of some of the general MNRST provisions under the provincial law, because the same things apply to this City of Toronto MNRST. So the provincial MNRST, the entities that are subject to it, it's individuals that are not Canadian citizens or permanent residents of Canada. They're subject to that tax. Foreign corporations, like I explained before, and taxable trustees. So a foreign corporation includes a corporation controlled by someone that's not a Canadian citizen or a permanent resident. Okay, so the corporation will be caught. Trustees will be caught if any entity is buying it in trust on behalf of a foreign entity They're not going to get around this that way. So that's the provincial legislation. Same thing applies to the City of Toronto NRST as well. Okay. And again, just like the new city one, the NRST is for residential single family residents of one and not more than six. Okay. That's the threshold under the Provincial Act. So it's still the threshold. Exemptions under the Provincial Act, there's the nominee exemption, the refugee exemption, the spousal exemption. So those are exemptions. Again, they apply if they fit under those fact criteria, means they fill out certain forms and satisfy the government at both levels prior to closing, so they're exempt. They don't have to pay the tax. Now, for those that paid the tax, they might be able to get a rebate of the tax, but here, under the provincial legislation, it always depended on when you signed your agreement of purchase and sale, because they had grandfathering provisions. So if the agreement was signed on or before March 29 of 2022, and the property had to be within a defined territory at the time. It was the Greater Golden Horseshoe. It wasn't the whole province of Ontario. So if it was signed then and the property was in there, there was a rebate available to international foreign students and foreign nationals that were working on valid work permits in Ontario. They were eligible to apply for a rebate if they met certain criteria. So that's still applicable, but there aren't a lot of properties out there where it might be applicable on. But for any conveyance that was after March 29, 2022, the first two types of rebates were no longer available. The student rebate and the foreign nationals working on a work permit were no longer available. The provincial government got rid of that. So the only rebate for any agreement purchase sale after March 29, 2022 is the rebate available for someone that becomes a permanent resident within 4 years of completing the transaction. So that's why that's the only rebate that's available on the municipal NRST as well, because that's the only one left as a provincial rebate. So we put together a little chart that sort of explains some of the grandfathering from the NRST on the provincial side. So when it first came in, it was a 15% tax. So any agreements that were signed prior to March 30, 2022 was a 15% tax if it was a residential property and it was a foreign buyer that bought it and the property was located in the defined area of the Greater Golden Horseshoe region of Ontario. If they bought outside of that area, there was no tax. Okay. Then the tax went up to 20%. So any agreements that were signed between March 30 of 2022 and October 24, 2022, like during that 6-month period, it was a 20% tax, and it didn't matter where in Ontario that residential property was located. They got rid of the concept of the Greater Golden Horseshoe region. So it was anywhere in Ontario. And then as of October 25, 2022, the province raised it to 25%, and it's still anywhere in Ontario. So when you're looking at pre-construction, we got to go through this analysis. When was the agreement purchase sale signed? Were they foreigners? Were they not foreigners? All that criteria. But there was this grandfathering back then for the provincial legislation that doesn't exist in this municipal thing. So, anyways, I know when I talk about this thing, and I've done this webinar a few times already, and we always have people saying, well, just like when we did webinars or seminars on NRST and on the foreign buyer ban, you always get people coming, well, what about, I've got a client that here's the situation of this thing, and they might be doing this, and this is their situation. I can't give you a quick answer on any of that stuff. There aren't black and white simple answers for determining any of this. So if you really want to figure out whether your client or potential client can buy a residential property in Toronto, there's a whole bunch of criteria you got to go through, because you got to start with an analysis of, are they banned under the federal law? Okay. And it's not a simple answer. So when we get asked to do that, there's a whole bunch of information that we need, a whole bunch of factual information that we need provided to us. So we have to be retained as lawyers to go through all this and try and figure it out. Okay, sometimes it's easier than other times, depending on the facts. So the first thing you got to go through is, are they banned? Okay, if they're not banned, now the Provincial Act comes into play. Are they fitting the definitions of foreigners under that act, and they're allowed to buy, but they're going to have to pay the provincial NRST. And if they have to pay the provincial NRST and the property is in the city of Toronto, then they're going to now pay the provincial NRST, but they're also going to pay this municipal NRST because the criteria is the same. So there's no quick answers. There's no short answers that I can give any of you for this. Okay. And before I throw it back to you, Sabiha, for any questions, the other thing I could comment on, there's another bit of City of Toronto legislation that your friend Olivia Chow decided to put in, which is a tax on vacant homes. And that's totally different from all of this, because we know that there was foreign buyers. Again, it was mostly foreign buyers that they were attacking that owned certain properties that they weren't using and were left vacant. They weren't using them themselves and they weren't renting them out. And there's a housing shortage. So one way they thought, we'll get rid of this housing shortage, let's impose a tax on vacant homes. So in order to do that and figure out what's vacant, what's not vacant, everybody that owns a property in the city of Toronto has to file on an annual basis whether or not that vacant home tax is applicable to them. If it's applicable, they got to pay the tax. If it's not applicable, because it's just their house that they're living in or their condo they're living in, they file that and they don't have to pay it. But a year later, they got to file again. Every year, you got to file. And if you do have to pay it, you have to pay it every year. You got to go through the process every year, have to pay it, don't have to pay it, have to pay it. You got to file. So everybody that owns property in the city of Toronto has to go through this filing process every year for that vacant home tax, which is totally separate from all of this. Okay. And there's a lot of issues when they put this out because it was very confusing. It's onerous on people, especially that are, again, it's attacking a very small percentage of the population, but they're forcing everybody that owns residential property in the city of Toronto to file this and go through this process every year. Now, there's a whole bunch of exemptions that were built in there too. So there's no easy answers on that either, because it might be someone's principal residence, but it's under renovation and they have to move out for 6 months. So it would be considered vacant, but there's an exemption for that. If you can satisfy the city that the reason it's vacant is because you're going through this renovation process. Or someone that lives in a property that gets sick and has to go to a healthcare facility for an extended period of time, and it's vacant because of that. So there's exemptions that are available, and we got to go through all those fact situations for things. So no short answers on any of this stuff. You got to look at each individual act, see if it might apply, and then see if there's an applicable exemption or a rebate and etc. So not easy, but from your point of view, acting for any potential buyer, one of the first questions you have to ask them and determine with them is, are they allowed to buy a residential property? They might be banned by the federal legislation. And if so, it doesn't mean you lose a client necessarily, but maybe they'll buy a property that's not considered a residential property, not subject to the foreign buyer ban. Maybe they'll buy a multi-unit property instead as investment. Maybe they'll buy a commercial property as investment. Maybe they still want to invest in Canada, but they're not going to be able to buy a residential property. Or maybe they can buy a residential property because they're not banned, but it's going to be more expensive for them because they got to pay all these taxes on it. And then you got to figure out with them whether it's still a good idea for them to do it. Can they afford to do it? They still want to do it and bite the bullet, pay these taxes, or maybe you're going to help them buy a property that's not subject to this NRST, whether it's a multi-unit residential property or it's a commercial property, industrial property, or something else. So there's a lot of ways that you can be hand-holding your client through this process, but that you've got to make sure that they get proper legal advice on this and proper tax advice on this as well. So you're always bringing in the professionals to help you out because some of this is not so black and white easy to figure out. It's quite a process because the facts of every individual are a little bit different. So no short answers. So with that, Sabi, I'm going to throw it back to you in case there's any questions.
I have a couple of questions, but I also have a couple of comments. So under under the regular regulation of whether it's considered residential or commercial, a residential housing complex with four or more dwellings is considered commercial. But I noticed that you mentioned that for the purposes of this tax, it has to be six or more.
Yes, it's
So
six.
that is something that we need to keep in mind
Right,
because you are allowed to buy it as a foreigner. So the ban is not applicable. So I guess they kept this little loophole so that they're able
right.
to make this extra
So they
money there.
could so they could
Very
buy
smart.
it, but they're going to pay a tax on it.
Yes, yes. So that's one comment I wanted to make. Another thing I wanted to ask, and I mean it's the benefit for the group, but we have you and your company, your firm, and myself have a common client. They bought a property at Tridell's DuPont, and the wife is Canadian citizen, but they're non-resident citizen, and the husband's not a Canadian. So would both the taxes not apply to them because she is a citizen,
Yeah, like the fact that
non-resident citizen?
the fact someone is a non-resident, you can be Canadian citizen, but a non-resident. So residency has nothing to do with these acts.
Very good. Okay.
Okay. The
So
residency issue is going to come up when they go to sell the property.
right.
Because if they sell the property and if they're a non-resident at the time of selling the property, then it could be subject to withholding tax, and you got to go through that clearing process with the CRA to make sure there's no taxes owing. So that's when the residency issue comes up. But the
Because
residency's got nothing to
this
do
comes up
with
quite
this
often
definition.
when they're non-resident citizens, and there's always a confusion. So this is
Right.
good to clarify.
Yeah. So a non-resident Canadian citizen would not be subject to the NRST.
Right. I had just those two comments from that, but it was very helpful. Anybody else has any questions, guys? All right. So I mean, at the end of the day, um, this tax is applicable to things in Toronto, City of Toronto only, not province-wide. So I'm just thinking of how you can still serve your foreign investors. So I guess it would be to first of all to go and find something out of Toronto, and number two would be to find something that is four or more dwellings in one commercial transaction. Yeah.
Yeah, and on that basis, like if they're not banned and they're allowed to buy, but they're subject to the NRST, they'd be saving a significant amount of tax if they're buying in Markham or in Mississauga versus buying in the city of Toronto, right?
Hmm.
They'll
Hmm.
still pay the provincial, the land transfer tax will still be provincial transfer tax will be paid, provincial NRST will be paid, but they wouldn't pay the City of Toronto land transfer tax, and they wouldn't pay the City of Toronto non-resident speculation tax. So they could save
Right.
a fair chunk of money if they're buying outside of Toronto in the neighboring municipalities. Okay, and right now we've got no indication that any of the neighboring municipalities are going to jump on the bandwagon. And I think they're all happy that Olivia Chow imposed this because it might drive more people to their municipalities. Okay. For
Mm.
the same reason, nobody in the city of Toronto, around the city of Toronto, has imposed the municipal land transfer tax. The city of Toronto did it, and then Ottawa did it. But you know, the cities right around Toronto didn't do it because they sort of benefited to some extent from it because it drove some people to just buy, on the north side of Steeles instead of the south side of Steeles, or to buy just west of Etobicoke and get into Mississauga, cross the street and buy over there and save the tax.
Mhm. Mhm. And another thing is if they do have that available cash and they have applied for a permanent residence and it's just in the process, then they can take benefit of the downward trend towards in the favor of buyers, and they can actually purchase the property and get a rebate within the 4 years of purchasing the property. So
Right. Which is a great point. So yeah, so if they fit that fact situation where they're likely to become a PR within 4 years, they can get the tax back. So it's just a cash flow situation. So as long as they've got the cash flow, or they can finance the taxes that that they're paying, and then as soon as they're eligible as PRs, they can apply to get it back. So so that works for some people, but they've got to make sure that they're on the road to becoming a PR. And again, they got to do that within the 4 year period. Because if they're outside the 4 year period, by a day right now, they're screwed. They can't get it back.
right. All right. Thank you, everybody. Anybody has a question, at least
Yep.
put
So I'll
something
share the
down.
presentation with
Um,
Sabiha so she can
Ke-
pass that on to you. And while she's
sure.
passing you Olivia Chow's personal information, you can get the presentation too.
Kelly has a question here. She says, how long will the foreign buyers tax last? And have they stated whether any of these NRST or MNRST taxes are going to be permanent or just for a certain time frame?
Nobody's that I know of put a deadline on it. I don't think it was any part of the campaign
No,
that word just went through
debates.
saying, that we're going to end it. And I don't think the opposition party were saying, elect us because we're going to end this. I don't think anybody was saying that.
No, there
And
was mention of the capital gains tax, um, but not of
yeah,
yeah.
yeah. And again, the capital gains tax is a federal thing. And now
Hmm.
we're going to have an election supposedly in about 6 or 7 weeks.
Hmm.
And we'll see if whoever's elected at that time is going to get rid of the foreign buyer ban or extend it further or do anything about that capital gains. If they're going to, if the liberals get in again, they might try and change the capital gains rules again. I'm pretty sure that the other parties were against it,
Yeah,
but somebody's got to win the election, so we'll see
right.
what happens.
Yeah, the gains tax is part of the Liberal Party debate as well to remove the capital gains tax. But I have a comment about the NRST and the MNRST. For as long as I've been here, no tax has ever been put up by one party and removed by the other.
That's true. It's
So,
amazing. They're the biggest critics at the time these things get
and they
passed.
never do.
And then if they become the government, they go, oh, it's not so bad having this revenue.
Extra
You know,
pocket change. Yep.
right. And they know that people are, get used to it and just incorporate that into their budgets.
Yep.
People still are always going to want to live. A lot of people are always going to live in the city of Toronto, and they're going to pay higher property taxes now, and if they're moving from one place to another, they're going to pay, um, they're going to pay the provincial, the city land transfer tax because it's not enough of an excuse for them to go out of the city, and they'll try and budget for it. Maybe they'll buy a lesser property so they can afford to pay the tax, but they still want to live in the city. So, that's what seems to be happening.
Right. Right.
Okay. Well, thanks
Okay.
everybody.
Thank you, everyone. Have a good day. Bye.